Welcome back, traders and investors. I think we have our guest coming from the farthest place here. We have Paul Theron on the line from Johannesburg. He is the founder and principal of Vestact. Paul, how are you doing today?
Brilliant. Thank you. It's winter down here, but it's a bright sunny day.
What do you consider winter in Johannesburg? How cold
Well, I
is
think
it?
we've got weather that's quite similar to Southern California or to Florida. So even in the winter, it's not bad. Not bad at all.
Okay, yeah, you're lucky. So, tell us about your firm, Vestact.
Right. So we are based in Johannesburg in South Africa, and we manage money here in South Africa for South African investors. That's on our local Johannesburg Stock Exchange, which is about the 14th largest exchange in the world. But in addition to that, we actually manage money in the U.S., funds that are located in client accounts, but these are South Africans, in other words, who are investing in U.S. stocks. So from our base here in Johannesburg, we follow both the emerging markets as well as the same markets you guys follow, the U.S. markets as well.
Okay, so are majority of your investments in the U.S. markets or in the Johannesburg markets?
In fact, it's about 2/3 here in Johannesburg and about 1/3 in the U.S. But in fact, that's kind of changing. The U.S. investment by South Africa is growing a little bit faster because South Africans are becoming more worldwide, and more of them want to have investments globally as well as in South Africa. Although I should just point out that some of the biggest companies listed on our exchange are in fact, big global players that have South African roots, like SAB Miller, like Richemont, BHP Billiton has a partly South African roots. So some of our big companies are in fact household names on the global capital markets as well, yeah.
Okay, so you were the founder of Tradek, and that was the first online stockbroker business in South Africa in 1996. So, boy, you got an early jump on things. I know I was a desk trader for a major brokerage firm at that time, and we dealt with the order flow. We didn't have to deal with these pesky high frequency traders. Posted two-sided markets. What made you decide to start this firm, and how did it go?
Yeah, that's a great question. Look, we really just did what everyone else was doing in the mid-90s, which was to copy what E-Trade and Schwab were doing. So we bought a local brokerage firm that had a couple of brokers and a seat on the floor. And then when the market here went electronic, we set up some very simple websites and started taking orders and directing them. As you say, those were the glory days. There was a lot of excitement about the .com market and so on. So effectively what happened is that business evolved into what I do now. So since then, most brokers, as is the case in the US, have an online platform. Some firms do it better than others. And we sort of evolved a little bit away from the discount order flow of the online world into a slightly more advice-based model. But, the internet now is ubiquitous, of course. I mean, it's the principal platform for everyone, whether they're in the institutional or the retail market. It's kind of everywhere, isn't it?
Okay, so your portfolio has performed the Johannesburg Stock Index by quite a large margin over 5 and 10 year periods. What's enabled you to do that?
Yeah, look, it first should be said that the Johannesburg market has done extremely well for two reasons. The first is Johannesburg, as you may know, has a kind of a resource bias because there are quite a lot of mining companies down here. So in the first part of the last decade, we had rising commodity prices thanks to our friends, the Chinese. So we've had very good growth in our mining counters. The second half of the last 10 years, we had that kind of emerging market consumer-driven success story here. So as you know, Africa is an exciting new frontier for companies. So we've had high growth from our retailers and our food producers and our pharma companies and that kind of thing. So The South African market's done well. Over the last decade, it's grown by about 18% compounded per annum. So that's pretty good. Our portfolios have done even better than that, largely just through focusing on a couple of those subsectors of the market which have done even better. So as a firm, we're focused on the technology area. So in our case, that means cell phone, telephony, mobile telephony, the actual mobile carriers. We like the healthcare sector, so that's hospitals and pharma. And then we also like anything to do with consumer, so retail, food, that kind of stuff. So I think just by being patient, we like taking long-term stakes in market leaders in growing parts of the economy. That's basically the formula.
Okay, so you talk about South Africa being a resource-rich country, and obviously companies like gold companies, right? Isn't there a lot of money? So could you please give us your perspective on the gold market?
Right. So look, South Africa was the world's largest gold producer in the 1960s and 1970s. Unfortunately, what's happened with the South African gold mines is they've become progressively deeper as the high-level, easy-to-access grades and resource bodies have been worked out. So in fact, the South African gold producers are not a particularly exciting part of our market anymore. Most of our large gold companies, and those would be companies, for example, like Anglo Gold, Ashanti, Goldfields, you may be familiar with.
Yeah.
They are listed on the U.S. markets as well. Those companies have largely internationalized their operations. They still have some footprint here. But in fact, it's become a bit of a struggle. And, we don't, as it happens, currently invest in that part of the market. As you can probably tell from my way of speaking, I'm a bit of a dyed-in-the-wool optimist. So for me, the gold sector and the whole idea that the gold price is going to benefit from hyperinflation and economic difficulties in the world, that's not something I'm really all that inspired by. So we've really tended to avoid the gold sector, and it's largely served us well. The gold producers are quite twitchy. They do well for a while, then they don't do well again. So it's part of the market we've avoided, and that's worked out well for us.
Okay, so you're staying out of the losers and trying to go more heavy into the winners. I'm sure, with your method of investing, long-term portfolio management, you have to keep an eye on the U.S. Fed. We do have a Fed meeting today. People are thinking, eventually the pace of tapering is going to increase. We did have some consumer CPI yesterday that hinted of a little bit of an uptick in inflation. Do you think as long as the Fed maintains its accommodative stance as far as the quantitative easing that, we're just going to continue this slow grind north?
Yeah, that would summarize my view perfectly. My general view of the fiscal authorities, or rather the monetary authorities, is that they want to do the best job they can do. I'm pretty sure you could say that of Ben Bernanke's there. I think Janet Yellen is in the same camp. She wants to remain accommodative while at the same time try to normalize the Fed's balance sheet and normalize the Fed's involvement in our economy. So we expect them to remain accommodative to the extent they need to be. I don't know, perhaps because we're not in the U.S. economy itself, I tend to view the outlook perhaps a little bit more favorably. I know for some American investors, they've viewed the market's rise in recent years with some bemusement. But you must remember, many of the companies in these top indices do more and more business, make more and more of their profits outside of the U.S. So even if the U.S. economy appears sluggish, if unemployment markets appear sluggish, I don't think the market is overvalued at current levels. And yeah, absolutely, I do expect the Fed announcements to come and go without too much fanfare and for the market to continue in positive vein to the end of the year.
Okay, and just as we wrap things up here, just could you talk about, some of your U.S. holdings for your clients?
Perfect. And in fact, it touches on a theme for me as well. U.S. investors might be listening to this and thinking, well, that's all very well, but emerging markets are too far away and the companies there are too hard to get to know. But Some of the companies we invest in the U.S., we invest in them precisely because they've got great growth potential both in the U.S. and outside. So the kind of core holdings we've had and which have been our most favored in our U.S. portfolios are shares like Nike. I mean, Nike, of course, is a great brand internationally, and you can see with the World Cup soccer going on in Brazil. But there's enormous potential for businesses like that to sell more and more products outside of the U.S. We're also very keen on companies like Visa because of the fact that there's still so much cash used around the world, but there's a growing move towards credit and debit cards. Even companies like Apple and Google, enormous potential to sell more handsets down here and elsewhere, other continents. So those kinds of stocks. And then in the healthcare arena, stocks like Johnson & Johnson, Stryker, Zimmer, Cerner, all U.S. companies with great prospects around the world.
Okay, I'm going to stray just a little bit here for the final question because you mentioned Visa and the enormous cash transactions that go around in the world on a daily basis. Are you a Bitcoin fan at all?
I'm a more conservative, regular sort of a guy. The Bitcoin thing sort of leaves me a little cold, I must say. I mean, I'm reading stories about how people are cornering the market for their manufacture and mining. That doesn't sound very attractive. So, I would exactly say that you should rather invest in Visa than get excited about Bitcoin because Visa is real money moving between real financial institutions, small amounts of money being made on a multitude of transactions. That's the real world, whereas the Bitcoin stuff, I don't know, it just seems like a bit of a pipe dream.
Okay, and just any final tips for our investors, whether in the U.S. or around the world?
I think one's really got to look for the quality in markets and accumulate assets and hold them for the long term. Reduce your paperwork, simplify your life, do the hard work when you buy, and stay in for the long run.
Okay, we've had Paul Theron here, founder and principal of Vestact, calling all the way from Johannesburg. Thank you very much for coming on. It was delightful to hear your insight on the markets, and we'd certainly like to have you on again.
Thanks, Joel. Look forward to speaking to you again soon.
Okay, thanks, Paul.